Hi everyone, thanks so much for joining our June webinar. Before we begin the webinar this month, I wanted to make an announcement regarding our co-founder and my stepfather, Larry Kinlan. Um, as some of you may know, Larry has been struggling with pulmonary fibrosis for the last 3 years, which is a hardening of the lungs, and it brings me great sadness to say that he has passed away on June 12th in the morning. Um, on top of being my stepfather and mentor, Larry was really the whole reason Life Design Analysis exists. If he hadn't brought me into the office that day, um, we wouldn't have this wonderful tool available to us all. So I just wanted to pay tribute to him and say thank you. And Larry is one of those guys that his passion and enthusiasm for the industry, would have been immediately recognizable to anyone who met him. So I'd just like to give a moment of silence before we begin our webinar and just say thank you. Thank you. Now, for those of you who know Larry as well, you know, he was the type who would have said, keep moving forward and keep carrying the torch. And that's what we intend to do. So, without further ado, I'd like to get started with our webinar. I think we have a great webinar lined up for you this month. And, in some sense, even 2 weeks ago, I was picking Larry's brain about disability and, some of the finer points around it. As many of you know, he's the insurance expert with over $1 billion in force and 51 years of experience. So, usually when I have an idea for one of these webinars, I go and bounce it off him and get ideas. So, his knowledge and his experience will, keep shining through in some of the features and improvements we have coming forward. The first really topics that we're covering this month really are around 8-pay whole life products is the first one. And this is actually a case study from an advisor. He kind of came to me and was looking at 20-pay whole lives, but he had a particular issue with a client who was funding this policy for their son. And, through some evaluation of different products, we came to actually find a great use actually for this 8-pay. So we'll explore that case study and some of the things that, we looked at to determine that this was a really good solution. The next one we're going to look at is a Forrester's case study, and they've just, kind of launched their new whole life line. But one of the interesting products that they have is this economy 20-pay whole life, and economy is the dividend, or enhanced often it's called. And for a lot of clients who are interested in permanent products or have a need for permanent solutions but don't necessarily have the funds or the cash flow available, some of these economy products make a really good solution. So we're going to explore the Forrester's economy solution and compare it to some universal life. We'll try and match it dollar for dollar and see how much time we have there. We're also going to explore some of the notifications. So again, a lot of new notifications in the system, things like client birthdays, policy opportunities, cases that have been shared or viewed by your clients. A lot of times you get these notifications, and if you don't clear them, you will get an email telling you have unread notifications. So I just want to show, if you're not liking getting those every day, you can change not only the frequency but also what type. So I just want to show how to do that. And then we're also going to cover some DI, how you can enter it. Again, with DI, it's really, I don't think it's as much a price comparison as it is a contract comparison of what's a covered condition, what's the waiting period. But, again, because Life Design Analysis is such a fantastic presentation tool, I do want to show some options on how you can present these solutions to your clients. Frame them, and again, add some of that additional detail that helps make some of those finer points of DI coverage a little bit more accessible. And we're also going to do some updates, what's new this month, things we've added, and update you on some of the things we're working on. So without further ado, I'm going to start and log into my account, and we're going to start getting created on our first concept, which is the 8-pay case. Now, I'm going to create a new client here. So I'm going to say add new case. And I've actually created a client called 8-pay or 8-test. And I'll say continue. Now, the reason the 8-pay came into this kind of scenario was we had a client, and again, you can see I haven't said the birthday. The client actually was 35, so I'm just going to use the age override here and manually set that client age. Of course, you could set your birthday. This was I've been reviewing the different 8-pay options and comparing them to some 10-pay and 20-pay. And, it usually seems due to plan design that the 20-pay is kind of that sweet spot. 10-pay obviously is very convenient, get it up quick. But the 8-pay didn't seem to have a fit or maybe necessarily a real spot in the market. This was an interesting case, though. It was a female, or an older female, 68 years old, and she had recently been widowed, and her husband had left her an insurance policy, so she was sitting on a little bit of cash. She wanted to do the same thing for her son, who was 34. But instead of purchasing an insurance policy on herself at age 68, which she didn't think was a great return on investment, she thought it would be valuable to purchase an insurance policy on the son and build cash value through that whole life policy as the gift value. Now, she had a certain deposit in mind, which worked out to roughly, it was roughly $20,000 per year for 8 years. And the equivalent could have been matched into, that same deposit over 20 years as opposed to 10 years or 8 years in the case that we explored. So, going through this case, one of the biggest concerns was that if we did purchase, say, a 20-pay and 7 years down the road at, age 75 or 76, she was, if she prematurely passed away, that this policy that she had purchased or this gift she had funded would not continue to get paid, or, maybe insufficiently funded and would lapse. So one of the ideas that we came to was, maybe an 8-pay actually would fit in this particular example when we had an elderly person, looking to purchase a gift or looking to get something paid very quickly. And, there's two real, kind of quick pay options on the market. One is the Sun Life Accelerator, and the other is the Empire Life 8-pay. And what I'd like to do in this one is basically take the same sort of deposit and look at which one offers the better rate of return, and then again we'll hopefully compare it to maybe a 20-pay or a 10-pay from that same company, and just see can we get a better rate of return considering. So what I'm going to do is I'm going to start with the first one, and I'm going to start by adding a Sun Life Whole Life. And I'll just, while that's loading here, I'll just pop into the Sun Life to show you. I've created a quote. Again, this is for the 35-year-old son. We've got a $20,000 a year premium mark. And again, it's going to be a guaranteed 8-year pay. So again, you can see I've done an 8-year yearly. Now, really all I have to do is say I want to view the spreadsheet. And you can see it loads it up. And there's this button right here that says export this to Excel. And when I click that, it downloads right to my computer. Now, when I come back to my design 8-pay, what I can do is I can import that entire spreadsheet file. So all I need to do is say select this, and again I can go into my downloads and select that file and say open. And it's going to download or upload, as it were, into my case here. Now the next thing I want to do is I want to add the alternate 8-pay, which of course is our Empire Life Whole Life, and I want to put it in there and add it to the case. Now, just while that's loading again, I'm just going to go show that I've done the exact same thing over here. I've set an 8-pay up with a $20,000 deposit, again on paid up editions. And I'll just update my summary here. And I just want entire payment period. So I've got that all updated. Okay, perfect. So $20,000 deposit. And just to show, I've got the same 35-year-old male, non-smoker. Now, again, I can view the data and say export to Excel. This is, again, if you're new to the system or just looking at this for the first time, again, you can take quotes from the illustration software, export them, and bring them into Life Design Analysis. And just like I brought in the full spreadsheet in the first example, again, I can bring in by copying and pasting as well. So again, I'm just, for those of you, again, watching for the first time, I can select all here, and I'm just doing a Control-C or a copy. And I'm going to come back over to Life Design Analysis and then just say paste. So there's two different options to bring it in, but a really simple process to get all that advanced quotation. Again, this is going to bring in all those reduced and guaranteed examples, which we really want to look at here. Now, when I go down, I just want to point out that we want to be very careful about specific report components. So, again, we're funding this to the same deposit, so I don't really need to see annual and sum of premiums. And again, I'm not so concerned about individual cash and insurance charts. I really want to see how they stack over top of each other, considering that we have compared one to the other. Now, again, I'll also leave on the credit to the CDA just because I want to see if it were a business owner. This case is not necessarily that one, but I just want to see which one has a better wind down of that ACB value. And I'll leave that. I'll take off the alternate investment. And I will keep the IRR, even though it'll be pretty obvious with the same deposit. And I'll take out these equivalent ones. So again, just customize your metrics to see which ones you really would like here. So I'll keep the IRR charts. And then again, click Generate Report when you're ready to produce it. And so, again, very different plans from Sun Life and Empire Life. I've done a case study on this before, not live on a webinar, but it's very interesting to see, very similar products as far as 8-pay whole life products, how vastly different they can be. Okay, perfect. So our report has generated, and again, for those of you watching the first time, your logo goes here, company name. These are all customizable reports for your particular client, in this case, an 8 test. And again, when we look at the premium schedule, I just want to show again, both guaranteed 8-pay, so we know we're ensuring that our client does not have to pay any more than the 8 years, which again is really key in this one because of our client who's actually funding the policy being 68. Now, again, one of the things I think you'll notice right away is the insurance benefit on these. And you can see the Sun Life Whole Life having $265,000, roughly 266, but the Empire Life having 441. So you can see even for the same deposit, we're getting a lot more insurance benefit out of that Empire Life. Now let's dig in here. I do like to show the sum of premiums here. And again, we know that they're funded. As some of you looking at it saying there's only one line there, it's actually because they're tucked right behind each other. So you can actually see one then the other underneath each other. And we can also see that even in a reduced example, so if I turn each one of these on individually, I can see even in a reduced example, we're guaranteed that 8-pay. And that's one of the nice things about this product is that it is a fully guaranteed 8-pay. So if time is something pressing, it works out really well. And for those of you curious, again, at the end of the 8 years, our client would be 43, but the mother who is actually funding this policy would be 76. So again, it funds it well before life expectancy, whereas if we looked at, say a 20-pay, the person funding it may not be around. And again, that's one of the concerns that, we haven't properly funded it and it may lapse. Now, when we look at the cash overlay, again, we've put in the exact same deposit. We know the insurance benefit right off the bat was in favor of Empire Life. In this case, actually, the cash value is 2. We can see in blue here, this is the Empire Life cash value. And it actually looks like it's pretty much, as far as it goes, it sort of levels off around year 7. That's where Empire Life actually takes the lead here and goes all the way, leads all the way to the finish. Now, the total cash value is not entirely, it is a projection. So again, if you believe differently or more strongly that the Sun Life dividend is going to hold versus the Empire Life, again, they're both fairly close in this regard. But again, it is important as well to, kind of evaluate these different plans. And I should point out as well, certain companies have, certain sweet spot. So again, this client is 35. That's another reason why it's so important to vet and stress test these different options, because again, just because Empire Life is better in this area doesn't mean it is across the board. Now, I don't just want to look at total, I also want to look at guaranteed. So what I'm going to do here is I'm just going to click the legend items here where you can see total cash value. And by clicking these items, you can see that, again, I can bring in things like the guaranteed values. And again, quite interesting here, you can see that Sun Life has a lot more guarantees right off the bat. But again, right at that 8-year mark, which is sort of where the Empire Life one took over, again, we have a lot greater guaranteed value. And actually, this is quite a substantial value coming out over the course of the policy. If we take it out to, let me just bring back in the sum of premiums here. Get rid of those there. You can actually see we can guarantee our clients essentially that that they'll get more cash in their policy at year 19. And that's something actually that's quite significant because, again, a lot of people will sell on guarantees. There's a lot of, we believe in the total and we believe in the dividend, but consumers are not always as trusting when it relies on an investment component. So again, if your client is concerned about guarantees, this might be another reason why we want to look at the 8-pay, in that it does have very strong guarantees here. But one other aspect that I want to look at too is the reduced examples. And if I look at the reduced examples here, I can see again Empire Life, remaining strong over the Sun Life. So that, because the deposit's the same, I don't really necessarily need to look at the IRRs. I'm pretty sure, again, and because I know how the formula works, that the Empire Life in this particular example is going to have a stronger internal rate of return. Now, the other thing, though, is, as I say, if you thought that the Empire was going to reduce and the Sun Life was going to stay current, you could also look at the cash values in that regard, one at primary, the other at reduced. And again, they're pretty competitive up until around that, sort of that 26-year mark. But again, important to look at these. Now let's also look at the insurance benefit. Again, we could see that the Empire Life initially had a lot more insurance benefit at the 441, but over time, again, as those kind of dividends buy up more insurance, we can see it does get a lot tighter as the years go on. And I usually like to look at around age 85. I know life expectancy is sort of pushing out, but I tend to think that's usually where clients think about it. And again, it's very close insurance benefit here. Empire Life is slightly edging it out. If we look at things like turning off the totals and adding more like looking at just the guarantees, we're going to see here, because of the different mix, again, of base and permanent, that Empire Life actually has a larger guaranteed base of insurance as well there. So this pretty much gives me my answer here. Again, I know, I can look at reduced as well here. But for this particular premium deposit and this particular client's age, I'm going to go with Empire Life. Now, because I've got that answer, again, I can look at things like credit to the CDA, very, almost a mirror of each other there, same sort of chart. And I can look at a nice presentation summary. Again, you can see $16 different. But this will actually distill that exact premium deposit difference versus, say, the cash values in the policy or the insurance benefit difference. But, we pretty much got our answer that the Empire Life in this case is better option. Now, what I want to do, though, is just because it's an 8-pay, I do want to make sure I stress test against a 10-pay. And what I'm going to do is I'm actually going to override this policy, the Sun Life one here. So I'm going to re-import a spreadsheet. So what I want to do is I want to go back to the plan design here. And because the PAR Accelerator is actually a unique product, I'm actually going to go back here and say I'd like to look at a PAR protector here. And I'm going to enter a 10-pay just because I want to do my due diligence. I want to see that I'm making sure that I'm getting the best product for my client. So I'm going to say the same amount. I'm going to solve by payment. And in this case, because I'm picking a 10-pay, instead of putting a $20,000 per year, I'm going to put a $16,000 per year. And the reason I'm doing this is because we're going to have 2 extra years of payment. So I'm trying to make the total output match up exactly. So again, I've got 10-pay and we're solving by payment there. So again, 35-year-old male. Again, same sort of process. We're going to say view the spreadsheet and let's export to Excel. So again, it's going to give me all my values there. And I'll export that one. Now, again, this is a good exercise. You can see that, if I go into LDA, I can see by just clicking on the actual product, this is the one I've uploaded. But if I ever make a mistake or want to change that, again, I can always override or re-import that spreadsheet by just simply selecting a new file. In the very same way that I imported the first one, I can override this one. You can see it's just uploading there. And it will override that. And again, the only reason I'm doing this is I want to see, is the 10-pay better than the 8-pay in this instance? Because again, this is a guaranteed 10-pay, and 2 years longer for someone who's age 68 is likely not going to impact the grand scheme of things. But I do want to make sure, again, we're getting this policy funded so it can actually carry out its purpose. So again, just like that, we've got our report here. 8 test, maybe not a great name for the client, but we can see 2 different deposit schedules. And again, my goal here was to match the sum of premiums so that they're the exact same. And again, 8-pay here with one, 10-pay here with the other. And really, again, I'm going to go over Cash overlay in this case is almost identical, a little bit stronger in the case of the Empire long term. And we're talking though cash post year 85. Again, I'm not sure how many people leverage cash around that stage. If we look at sort of the critical area here, again, slight advantage though to that Empire still, and we're still accomplishing that earlier pay schedule, which can be beneficial for someone of this age. Just guarantees it. And again, Empire's got a stronger insurance benefit there too. Credit the CDA even tighter in this example. Now, the one thing I am kind of curious about in this example is just because there's a slight difference in time, and again, we're going to see, it's only 2 years, but again, we'll still see a little bit of time value of money. We can see it is very, very marginal here as far as the difference. So almost exactly the same. You can see the Empire Life, if we take out, on cash value, I like to look around age 70. You guys may have different preferences, but you can see Empire's slight edge, but we're talking 0.2% better IRR. Again, almost a mirror of each other. If we look around age 85, the Sun Life actually has a better internal rate of return here. So those extra 2 years, because we're staggering the deposit. And that's the whole idea of holding on to your money. 2 years in the future, we've had 2 years of inflation. And so, even though the premium deposit remained the same, money not being worth quite as much is probably the difference right there. So again, gives us some options. But again, I think this is a really neat case, where we actually find a use for some of these 8 pays. And again, if you out there listening have found better uses of these 8 pays or have something different that I haven't thought of, please share your thoughts. I'm always happy to hear ideas of how people are using these new kind of products and if you had success using them. So that's our 8 pay comparison. I want to go into our next case study here. And what I'm going to do is I'm going to make a new client here. And I'm just going to call this Mr. Forrest. And I'm going to make this client 40. So I'm going to go to 77 here. And we'll set it as male. And I'll save this one. Okay, perfect. And I'll say continue. Now, in this case, again, we're setting up basically an alternative to a universal life or someone who needs permanent insurance, but maybe doesn't have the cash flow to support full paid up additions or some of the, I'll say the big par plans that have huge premiums and again, respectively, huge cash values as well. But again, sometimes that takes us out of a certain market, and sometimes we could take a little less premium, take a little bit more guaranteed insurance benefit, but still have some icing on the cake. I'm going to search for a nice even round number here. I might try this if we have some time here with some different face values, but let's just take a look here. So I'm going to say $1 million, and I'm just going to do a search for universal life, and I want to pick the most competitive UL term to 100 out there for a 40-year-old. Again, the reason I pick 40 years old is I find, this is sort of the sweet spot of transition where people are becoming a little bit more established and making a little bit more money. Again, they might be thinking about, again, permanent insurance, but cash flow is still an issue. So I'm going to say, let's add this BMO. It comes up as the rankings number 1 at $8,300, which is actually a really great price considering UL prices recently for $1 million. So, historically, UL prices have been on the rise, but that's a nice price for it. Now, the other thing I'm going to do is I'm going to add a Forrester's whole life, and again, we've customized all their new spreadsheets to work in the system. So all you have to do is your typical process of you can either search for it and look at on a guaranteed basis, or we can bring in the whole spreadsheet and bring in some of those reduced examples. So you can see here, I've gone ahead and I have customized, and I'll just get rid of some of this just to clean up my screen. So you can see I've done the same thing. I've customized a 40-year-old male non-smoker. I haven't added any riders, but again, when we think about these sort of plans and getting the most bang for our buck, these plans, these economy plans or enhanced plans as they are often called, in this case are called enhanced, are actually quite valuable. You can see I've got a 10% reduction. You can do a little bit more. I've specified a 20 pay as opposed to a pay to 100. I usually find 20 pays have quite a sweet spot. And again, I just want to specify it's $1 million in coverage just to make it apples to apples. So I've got the coverage there at $1 million. Perfect. And again, just like any other software, I want to export it to Excel. And I have the ability to actually import this entire spreadsheet. So again, from here, once it's exported, again, I can select all and copy and paste, which is my preferred method. So I'm just doing a copy here. Or again, I could just save this, and again, I could save it to my desktop and call it Foresters. So I'll save that. And either way is fine, I mean, depending on your preference, but I'm just going to go back here and import our Foresters whole life sheet that we saved to the desktop. So I called it Foresters XLS, which is the Excel file extension, and I'm going to say open. And again, it's going to do its job. It's going to import. It's going to read the whole sheet. You'll get a success message if it's successful. Now, again, one thing I really like about this kind of comparison is that Foresters, again, we know it's going to be a guaranteed 20 pay. It's going to probably have, again, it's a little bit of a difference in premium. But in this case, I think the thing that's really great about this is that it actually has a lower premium than that universal life. So again, if you're thinking about universal life, or some kind of permanent, my mind usually thinks about universal life as the more affordable option for permanent, but if they can't quite buy a whole life. I think Foresters has really changed that game with some of their new enhanced products. So, I mean, if we look at this premium deposit difference, it's slightly different, but I mean, over the course of a year, this is a very, very marginal difference. 8,300 versus 11,000. Now, of course, we're going to break that down and show exactly how different that is. But the other big difference is that one stops at 20 years and the other one continues to pay. So again, when we're thinking about permanent solutions, this one's going to have the icing on the cake. Yes, we're asking for a little bit more money up front, and ultimately we want to save our clients long term. Now, sometimes the other benefit is that because we get paid on FYC, it might mean a little bit a slightly nicer commission for you. And again, I would always say, do whatever's in the client's interest as opposed to commission. But in this case, I'm always in favor of a win-win. And again, we can see our break-even point here is at year 28, age 68. And again, because it's a 20 pay, we're ensuring that we're actually saving the client money. Now, on top of this here, because we've paid a little bit extra and because it's a whole life plan, even though it's an enhancement, it's still going to have a cash value for it. And the thing I really like about these enhanced plans is, sure, they don't have the same IRR as, say, a paid up edition or, some of those other plans. They still have a strong cash value, and maybe they're not as efficient, but they're a lot more accessible. And again, one thing clients that I know really likes, and even just speaking as a consumer, seeing that long-term this is less expensive would certainly be a positive and probably enough to skew me in favor of this enhanced plan. But the fact that I can see that there's also a cash value greater to that of my premium deposits would be a really strong sign. It would be a no-brainer for me as a consumer. And again, even if I throw on the guarantees here, again, I'm looking for that guaranteed value. So you can see our sum of premiums is $230,000. As I move my mouse over to the right, I'm just looking for that year where 230 comes in. And you can see if I can guarantee my client that, by age 71, not only will they have paid less, but I can guarantee that if they cash out, all of their premium deposits can be returned. That's a very powerful conversation to have with your clients. So again, think about that for a moment. We're saving you money here, roughly $30,000 at that point. And if you cancel or should not need the insurance, we'll cash it out and you'll get all those premiums back. So again, very, very powerful messaging, though, again, guarantees are great. And I was speaking with someone at the Sales Congress who said, I like to sell on guarantees, which is phenomenal. But we can also look at a reduced example. And again, look at the dividend history. And again, feel free to control these with different reduced examples. I've got mine set at 10%. You may want to get more aggressive with the reduced and be more cautious. But again, I really think it's important to show those guarantees, but really focus on that core message of this is better long-term for you. And again, we want to look at the insurance benefit. You can see with a lot of these enhancements, because it's sort of that, basically it's a hybrid of a paid up edition and a YRT, we're seeing that once all of that YRT is replaced, in this case at year 37, age 77 for this client, well before life expectancy, that's when it turns into full PUA, and we still get that kick on kind of the end side. So even if we take them out to life expectancy or maybe a little bit beyond, we're actually increasing that value, whereas that universal life is just going to stay level for life and not have any really cash value. And if it is, it's going to have a surrender. So I really like this kind of comparison, again, highlighting this is how much money we're saving you. The longer you live as well, the more you'd save. And this is kind of the cash value difference we're getting for it. Of course, that one having no cash value. And again, really no insurance benefit until those paid up additions start to get replaced. Again, if you want to expand here, more than welcome to it. But I think that's a really, really good example of exactly how you can kind of position those kind of economy plans. And Foresters has a really, really strong one. They've just kind of reinvented that plan, and I think it's worth considering. So, that's one example of a 40-year-old. One other one we could do here, and just because we do have time, I'm going to delete these here. I'm just going to, well, actually, you know what? It's probably faster to make a new case here. So let me just make a new case altogether. And I'm just going to try this same kind of comparison at age 50. So I'm going to create a sample client here, and I'm going to search for $1 million. I'll search for the best universal life rate. And while that's searching, too fast for me, let's search. While that's searching, I'm just going to input my client age over here as 50, export that to Excel, and this time I'm just going to copy and paste. So I'm just doing a Control-C, and I'm going to come back here. And again, BMO came out at the top. You can see for $1 million, again, $13,000 is the annual premium. This is for a 50-year-old this time. So again, that's the reason for the premium jump. And again, I'm going to compare it to a whole life. In this case, again, of Foresters. There you are. And in this case, I'm going to just paste instead of saving the whole thing. Now, sometimes you'll see it leaves blank. It's just because it's got a little extra data. You can see there's a bit of white space at the end of that spreadsheet, but it is there. Don't worry. I mean, just paste, trust it, and that it is there, and upload. You can see it'll tell you if it's done successfully. In this case, it is. And again, I just wanted to look at a different age bracket to say, is this still a viable concept at age 40, age 50? Again, I think it's a really good concept whenever you're thinking about UL. If you like these enhanced plans or these economy plans, certainly consider them. And again, reach out to your wholesaler if you'd like more information on them. And again, let's just go through this report here. So a little bit bigger discrepancy in premium difference at this age bracket. So, again, it's important to vet at all different age stages. But again, there's no really overcoming that over time. So you can see by age 80, again, I'd still say well before life expectancy, maybe a little bit after retirement. So again, if we're thinking about cash flow, it's a little extra bit of a stretch, but again, ultimately what we're doing is we're stopping that offset. So when I think about preserving capital and when we're in those retirement years, we don't want to have extra expenses. So that's the thing I like about these these 20 pay offset is that they do stop premium. Again, consumers really like getting all cash back. Look at the guarantees, look at the reduced examples, and again, ultimately we're going to still see some kick. Granted, not as much as before. I mean, obviously, the most valuable thing to a client is their age and health. So really stress that. And one of the things you may do is compare, one of these products at a certain age versus another age to show clients that, their age is really that valuable. But again, we're still going to save them, premium dollars and offer a great benefit, more insurance benefit. But it's really the icing on the cake of that cash value. So again, just having some cash value and having something to fall back on, is worth paying the extra premium for. And again, ultimately knowing it's going to save you money is really, something that's quite valuable to clients. Now, the last couple topics we're going to talk about are just notifications. So notifications are one of the next topics, and you can see up here I've been sharing a lot of these shared cases from the Premier package on social media, and as a result I'm getting quite a lot of reactions to them. Now sometimes you might say, I don't necessarily run a case on LDA every day, but I'm getting an email every day about notifications. And you can see if I go into my notifications, you can see clients, it's visiting shared cases. So I'm sharing these cases out with advisors. I'm sharing them on social media to advisors and saying, take a look at the power of these different reports. And I hope you guys are doing this as well, that, sharing different cases with your clients, getting feedback on what they've looked at. But some of you might say, I don't necessarily need an email every day. I'm already going into the system and looking at them. For those of you who want to control what kind of notifications you get and the frequency, I just wanted to show you really quickly in the account settings. So go up until where it says welcome and your name. And again, feel free to do this live as we're doing it together. You're going to look for the gear icon, which is probably where you're familiar to go with for all these kind of different controls of the report itself, like logo, color scheme. One of the tabs at the top that you'll see, Life Guide is in there. That's where you control your searching of the rates and things like that. And again, if you're using Life Guide and fresh to the software and just looking at this for the first time, you do get that 50% discount. So don't hesitate to sign up for the 30-day free trial, and just know that you do get a discount for being a Life Guide member as well, or a subscriber. But if you go into the System tab here, you can see there are notifications. And some of these are birthdays, some of these are case visits, some of these are conversion opportunities. Now, if you don't want to get these notifications, you can check these off and just simply not receive them. And we're going to add a lot more of these notifications. We've gotten a lot of feedback around them. So again, you should see a little bit more granular control around these, including things like making your own notifications. So I'll show you how that works as well. Now, on to our last concept. And again, what I'm going to do here is create a new case. And this came to me from a subscriber of ours. I'll just pick my sample client here, who's a 50-year-old male. I got asked at the Canadian Sales Congress, when are you guys going to explore DI? And one of the things with DI is it's a lot more difficult to quote automatically. And again, as I said at the beginning of the webinar, I don't think there's as much emphasis around price as there is as what a covered condition is and what the waiting period is. But if you are still looking to use our software as a presentation tool to kind of illustrate these, what I might point out is that while there's a lot of, sort of automatic rates provided to us in the system, there's also a very powerful manual system. And, while we have our term 5, term 10, term 15, term 20, I tend to think of DI like a minimum funded UL in the sense that it has a very level premium up until a certain age. So what I would do is, if you're looking to present DI, is I would select minimum funded UL here. You see, when you click it from the manual area, you have the option to adjust its age, or its name. And basically what I would do is I would take sort of what you're actually adding here. So in this case, I'm taking the professional series from RBC. So I'm going to say the Professional Series DI policy, or whatever you want to put in there, and really fill out that description with some of the pros and cons of this. So I might take a lot of this information here and copy this. Select what you think is applicable for your clients, and a lot of this is sort of your own. Your own knowledge as well. So again, I can take this, and again, for the initial premium here, what I've actually done is I've drawn up a quote, and I could say, this is a 90-day waiting period. And when I actually look at, again, the same table, I can see that the total annual premium is $1,697. Now, I probably haven't given this a high enough insurable income, so maybe I want to say $100,000 here. But again, I'm not by any means an expert in disability insurance, but if you're looking for something, so you can see this is $222.31 for $100,000. But what I can do is I can say let me just make sure I got that right, 222.31. So I can say 222.31 times 12, or I could specify it's a monthly premium here. And then I just say it's renewable till 65. So I just enter in that, and basically this is going to keep this premium level till 65. And I could say, what I might really want to do is I might say this is the DI policy, and I really want to give it a specific name, saying that this is a 90-day waiting period. So 90-day wait. And again, I've got some information about it there. And really, it's these sort of details that I think provide the most value as a DI policy. But I just wanted to show and give some ideas around if you're still looking to, put it in with your logo and your presentation and really give some information around it in a personal way. Again, as I say, feel free to customize that, kind of the information that's given. But then you could also compare it to, again, something like a 30-day wait period. So I can still take all of that same information and I'm going to say this is, the Professional Series DI, but I'm going to say this is a 60-day, or maybe I would do it as a 30-day wait. And again, under the Premium tab, what I want to do is now change this to 30 days, and I want to calculate. So 30, 30, 30, and now my monthly premium is $340. Just make sure that's right. And so I'm going to say 340 times 12. And again, renewable to age 65. And I'll save that. So if you're looking to manually enter something, I think about DI as sort of that minimum funded UL, where it's got that level cost to a certain age, and we're specifying when it's renewable to, but it's going to carry that premium. And as I say, I'm not a big DI comparison on price, but if you do want to add some of those extra details about what these, kind of the description, that's where I'd really add some of these things. And again, I'll just set the analyze age to, and so I just want to say this is to age 65, basically. And I'll generate that. Now again, feel free to use these kind of plan, like report note titles here, to add some extra description on a personal recommendation as well. So again, those of you who are experts in the DI field, again, I'd love to hear your suggestions, because I'm more than willing to do a follow-up on this. But just as an idea on how you can compare DI or manually enter it, I get a lot of questions around DI, and that's just a good example of how we might enter it in there and show, some of the highlights of these particular products, and why a 90-day wait has a lower premium. But when we actually think about 3 months without income, I mean, I know the stats support that most people don't actually save for that, and that's why we might want to show them the different one. As I say, because they're both kind of level to certain ones, I somewhat find it's not very compelling as far as a comparison goes. But you know what, if you're looking to quickly sum up the difference in cost over time and really focus on some of those details, definitely use some of those kind of the notifications or the report details and the report notes in there. But that's how you can enter it if you're looking to go that direction. Now, a couple new things in the system that I wanted to show as well on the topic of notifications. One of the things, and I'll actually generate this report and show a shared case. As you know, many of you with the Premier package are able to share these cases and share them with your clients and get those great notifications on them. One of the things we've built in is actually an expiration date. So when you actually create a shared case, you can link your clients to this case, or you can post it on social media. You may want to automatically expire it. So I could say that, I want to share this case with clients, but I don't want it shared past a certain point, whether it be 6 months or 3 months, if I'm worried about pricing changes or I'm worried about it becoming obsolete. Again, I can set a specific date that I want to expire this. So I could say set that date, and as soon as the 30th passes and we get into the 31st, that's when this case will automatically expire and the link will no longer be active. A couple other updates. If I go actually back to the last case on the beginning, you're going to see a couple new spreadsheets. So whole life, BMO previously did not have a whole life spreadsheet. They've come up with a couple new PAR products. You will see the new BMO whole life in there. You can add that in there. And the other one that we've added is the Avari spreadsheet as well. So that one's in there. And if there's any other one that you don't know about, certainly let me know. One thing that, again, on that shared case topic that you will see is we're adding a personal login as well. So you will see the ability to actually, when you share these cases on social media, capture that information from your clients. It'll make them register to access that shared link, first name, last name, email, phone number. And ultimately, we'd like to work towards that control. One other thing in the notifications tab that you will see is that now you can make a custom notification or create a reminder. And this is, sometimes you might get a policy opportunity, but know that, you have a certain meeting with a client later, or you know some background information. They always summer in Spain over the the break, so you want to follow up on that notification later. But sometimes you get a notification and you want to create a reminder. Again, now you can create a reminder in the system, link yourself to the case, schedule it for a date, add a custom message, or even a specific time. So again, if you do get a policy opportunity notification, but just want to create a reminder for yourself in the system, or remind yourself to revisit a case, certainly do that. Again, we don't want you to prospect and then, forget about these cases or let a client slip through the cracks. Remember, create notifications for yourself. So again, I want to thank everyone for joining us this month, and again, I want to thank all the members and everyone who's reached out for support about Larry, and just to say thank you so much for everything you've done. So take care, and if you have any feedback or questions, get in touch with me at charlie@lifedesignanalysis.com. So thank you again.